Hi, this is Indranil and welcome back to Business Bites in our channel, The Spotlight News, India's first online business news channel. In today's Business Bites, first news we have, Sachin Bansal is in talk to sell $100 million of his investment in Ola. Second news we have, Digital Personal Data Protection Rule may open new business opportunities for regulatory tech companies. Third news we have, cement company Nuvoco Vistas to buy Gujarat's Vadraj cement. Fourth news we have, Indian Oil Corporation to build green hydrogen plant at Panipat Refinery. And fifth news we have, IRDAI Directed Insurers in breaching of guidelines on management expenses. In first news, Sachin Bansal is in talk to sell his $100 million investment in Ola at a premium price. Flipkart co-founder Sachin Bansal has invested $100 million in Ola, co-founded by Bhavish Agrawal in 2019 as his largest personal investment. Recently, Sachin Bansal exited from IPO-bound Ather Energy, where he sold his tech to Zerodha's Nikhil Kamath, and he is solely focusing on his fintech venture Navi. Navi Finserve is a non-banking financial service company who had faced regulatory hurdle in raising external capital and also denied by the RBI for banking license. On the other side, Ola, run by Bangalore-based ANI Technologies, also has a plan to go public this year or by the next financial year ending in March 2026. Ola's valuation has been cut by its investors in recent months, and they also has discussed with the firm on their plan to participate in an IPO, including selling shares. In second news, Digital Personal Data Protection Rule may open new business opportunities for regulatory tech companies. The government has tightened the data regulations through the Digital Personal Data Protection Rule in creating new opportunities for compliance and privacy-focused startups, which proposed a system of registration of consent managers whose primary responsibility will be to manage customer data collected by organizations. The impact will be bigger for small enterprises and startups in India which collect a lot of users' data, but they have not invested in consent management and protection of consumer data, while large corporations with business operations in Europe and in the US will be better prepared to handle the new rules as they are already exposed to the data rules in those geographies. Regulatory tech firms like Legality and ID5, along with AI-driven privacy ventures like Skyflow, are looking to help technology-first companies in complying with stringent guidelines around processing and storing of consumers' data as their consent manager. Technology-led startups are likely to take on the services of these consulting firms in the first stage, where large corporations are expected to join for such services later on. In third news, leading cement producer in East India Nuvoco Vistas Corporation to acquire Vadraj cement through the corporate insolvency resolution process. Nuvoco will acquire Vadraj Cement through their wholly owned subsidiary Vadraj Corporation, which was incorporated in November last year, and is planning to invest in a phased manner to refurbish assets and will bring the operational improvements to start production in December quarter of 2026-2027. On the other side, Gujarat-based Vadraj Cement, has previously owned by AVG Shipyard, will add a 6 million tons grinding unit in Surat to Nuvoco's portfolio in boosting their production capacity of 25 million tons by over 20%, while they also have 3.5 million ton clinker capacity in Kutch, along with limestone reserves and a captive jetty. Nuvoco has a net debt of 4,501 crore as of September end and had made a loss of over 82 crore for the April to September period, and they are planning to fund the acquisition without a significant rise in their consolidated debt level. AM Mining India, which is a joint venture between ArcelorMittal and Nippon Steel, among other bidders who had submitted expression of interest for Vadraj cement. In fourth news, Indian Oil Corporation to build a green hydrogen plant at their Panipat Refinery in Haryana. Indian Oil Corporation Limited is seeking bids for a facility with a capacity of 10,000 tons per year of green hydrogen at the Panipat Refinery on a build-own-operate basis with a new technical qualification criteria where bidder should have 1. The right to set up electrolyzer manufacturing and or green hydrogen production capacity under Mode 1 of the Strategic Investments for Green Hydrogen Transition Program from the Ministry of New and Renewable Energy. The lead bidder is also required to meet at least 48% of the financial qualification criteria, and up to 3 other consortium members should meet at least 15%, and one of the consortium members should also be registered in India. Interested bidders should also have operating and maintenance experience of at least 6 continuous months during past 15 years in a processing unit with hydrogen handling facilities. Linde, GH4 India, AM Green, Jackson Green, ACME, NTPC Green and US-based Matheson Tri-Gas are expected to put in bids. And in fifth news, IRDAI directed insurers to submit a glide path for compliance which includes mandatory capital infusion and curtailed incentives in breaching of guidelines on management expenses. The Insurance Regulatory and Development Authority of India crackdown follows a sharp rise in commission expenses after the removal of product-specific commission caps in April 2023. Life insurance companies reported a 22% rise in their commission payout, while general insurance companies reported double of their expenses in 2024. In April 2023, IRDAI has imposed a limit on expenses to curb competition for market share and to improve financial discipline. Over 20 insurers have breached the limit as the new guidelines allows insurer flexibility in managing expenses. Out of 26 life insurers, 8 insurers breached the expenses of management limits in financial year 2024, while in general insurance segment, 15 out of 31 insurers came under this category. IRDAI has allowed limited forbearance for some insurers but mandated stringent conditions which includes capital infusion equivalent to the breach amount and curbs on key management personnel incentives where the regulator prescribed an overall capping of 30% on management expenses. In this regard, the regulator has also warned of consequences if insurers fail to adhere to the prescribed glide path for compliance within 3 years. So these were the top 5 business news from Business Bytes in our channel, The Spotlight News, India's first online business news channel. So thank you very much for watching Business Bytes and signing it off.